US-Iran war tensions have escalated dramatically over the weekend, and a joint US-Israeli airstrike has confirmed the death of Iran's supreme leader. Now, oil prices are climbing as we speak, signaling a potential supply shock in the Straits of Hormuz. And as crude oil prices tick upwards, the real threat isn't just the conflict that we are seeing now, it is actually the return of inflation. So in today's video, I am going to look beyond the headlines and share with you why this war might change the economic outlook for the rest of the year. Now, before we get into today's video, I just want to say this, that war affects everyone. We've seen reports of over 100 people killed in a strike in a school in Israel and a rising US military death toll. Now, these are not just headlines. These are real people with real families. And in this channel, I talk about the stock market, and I'm not here to debate about politics or take sides. But what I know is this, is that when events like this happen, they affect innocent people. Lives are lost, and the impact goes far beyond what we see on a chart or an economic report. And so, no matter where you stand, I want to give my heartfelt thoughts and prayers to everyone who is affected. Now, let's get into today's video. Now, let's look at where all of this happened first. So, actually, on March 1st, President Trump actually authorized this Operation Epic Fury to crush Iranian regime to end the nuclear threat and its military capabilities. So, and throughout the days, we saw the news develop and it was escalating quickly. And this resulted in Iran's supreme leader that was killed in an air strike. Okay, and this was what shocked the market before it opened yesterday. And it's what we saw in the futures market before it opened, right? What did we see happen in all the indices that it was down 0.6 to 0.7%, some even down 1% even before the market open, right? And for all reasons, right, the markets was looking for some reason to actually sell down and place the impact of the war in the stock market. But something interesting happened, right, when the market opened yesterday. And in fact, if you look at the closing price of the stock market actually reversed all of its losses and it closed positive, right? Something that separates the retail reaction from what the institutional funds and investors are doing, right? And by closing, you can see that all losses were erased. And if you were not watching the news, you would think that it was just any other Monday. But what actually happened beneath the surface of the indexes was some sort of rotation that was taking place. And the markets didn't actually ignore the war, it actually repriced it in certain sectors, right? What did we see happen, right? Capital actually flipped from very, very defensive sectors such as consumer defensive, example, airlines, cruise line, consumer discretionary stores like Walmart, Costco, restaurants, so on and so forth, and ran into other sectors, right? It ran into the technology sector. Surprisingly, if you look at companies like Microsoft, Oracle, Crush, right, all of them had very, very strong growth yesterday. And interestingly, right, if you look at this company, Palantir, it actually did 5.8% higher than the other companies that we see. Now, why specifically Palantir, even though they are in that technology sector, right? The main reason is that Palantir is not really considered only a tech stock right now. It is considered a defense stock as well. It is being priced as a major defense prime. Because nowadays in modern warfare, it is not just about companies that creates weapons. It's not about companies that create hardware. It is about the software that can provide real-time targeting and intelligence. These are just as important as the missiles themselves. And Palantir, in the case of the services that they provide, they are AIP and Foundry and Gotham. Now, this matters in modern warfare today, right? Because now it is about who sees faster, who gets the data faster, and who is able to organize and decide faster, right? Speed is of precision nowadays, right? And there's so much data in modern warfare: satellites, drones, radar, intelligence report, logistics systems, sensors, so on and so forth. And these are some things that as a human, right, if you're processing this data, it takes time. It is not quick. And that's where Palantir steps in, right? They connect data from many different systems, cleans it, organize it, and create this shared operational picture, which will then allow this defense, the government, the defense department, to actually make decisions faster, as accurate as possible. Now, these are like the brains and the nerves, the nervous system of the government defense. And that is the reason why you see Palantir actually rallying like a defense stock and not just a technology stock. Now, apart from the tech sector, we do also see very clearly the energy sector gaining closing positive, most of them, as well as aerospace and defense, right? The defense sector very, very clearly. And these are where capital are flowing to now, to assets that are physically necessary for survival and in times of conflict. Now, you understand aerospace and defense, and you understand Palantir, right? These kind of technology companies that provides defense services and solutions. But why would energy oil companies like Exxon and Shell, who provide oil, why are they going up, right? The whole sector. Now, let me explain. Now, you can see that this news it shares that oil prices surged as much as 13% in the first trade after the start of US-Iran conflict. Now, with geopolitical conflict, right, many times oil is always part of the equation. It will be affected. Now, why is this so? And these are some of the impact of how a conflict can actually increase oil prices. These are the latest prices we've seen in the last 5 days. And you can see how the spike in Brent crude oil and WTI crude oil of how the US-Iran conflict has caused them to spike close to $80 for Brent, and crude oil it is at $72. Now, and the reason is that the markets are pricing in supply chain risks. And the primary fear, where is this supply chain risk coming from? It is because of a potential disruption in this particular location called the Strait of Hormuz. Okay, and whenever tensions rise between any two parties, right, Russia, Ukraine, and in this case, Iran and the US, most of the time in the Middle East, this narrow waterway called the Strait of Hormuz will always be the center of global attention, because this is actually the world's most critical oil choke point. It is actually like a bottleneck. As you can see, this is the Strait of Hormuz over here. In this small little bottleneck, right? And why is this so important? It is because more than 30% of global oil and gas actually flows through this waterway annually, leaving the global economy exposed to disruptions. If anything happens to it, if this was closed, you can imagine everything over here, the oil will be disrupted and it cannot go to countries like Europe, to Asia, to the rest of the world. And this is where that fears of supply shock will come in, because if the Straits of Hormuz is closed, there will be lesser oil in supply, right? Imagine 30% of oil that disappear, right? And all this 30%, right, it actually goes to Europe and Asia. As you can see, 80% of this LNG passes through the strait goes to Asia, 20% to Europe. And with a supply shock, with lesser oil and the demand for it being strong, it will actually drive up oil prices and factory costs, especially as China actually leans on manufacturing and exports to sustain its growth. So that's the reason why in this kind of scenario, we see Exxon and Shell not becoming just an oil company. It is actually a geopolitical hedge, right? And every spike in oil prices actually goes down all the way down to the free cash flow. Now, and even though we've seen that that is important, right? But this is the main thing that actually caused the market to price in this premium in the companies that we talk about, which is Iran vows to attack any ship trying to pass through the Strait of Hormuz. As you can see, Iran is literally just right there. And so they can do anything to the Straits of Hormuz. They can attack any commercial ships attempting to pass through the strait. This was what led to a lot of fear. But the question is, can they actually close it? Does it make sense for them to actually close this Strait of Hormuz, right? Now, let's look at the data, right? So firstly, doing so might actually invite a near immediate naval and air response from the US, right? Because the US has bases around the region, and it will leave Iran's own coastline and its ports potentially vulnerable to US air and naval retaliation, right? And some might say the US air and naval capabilities are better than Iran, right? But would they risk that their coastlines and their ports will be affected by this? We don't know, right? But this is what they say. And secondly, by closing this Strait of Hormuz, it might actually affect Iran themselves. Because Iran also produces crude oil and they also export it. So if they actually close it, it will actually affect their own economy because the bulk of their energy exports actually goes to China. And furthermore, over half of all of these energy exports passes through the strait, whether it's Iranian or not, and it also goes to China. So simply putting this, right, China remains the world's largest global importer of hydrocarbon, LNG, and oil. And if Iran actually shuts down this Strait of Hormuz or they block anything, right, it might be difficult to maintain under pressure from China, right, the world's main taker of their own crude oil, right? So this is that constraint that they are facing now. Are they saying this just to threaten, or can they actually close it, right? But regardless, the market is pricing this in, and and if that actually happens, right, regardless, really the supply shock happens, is somehow the Straits of Hormuz actually closes, right, and oil prices become more expensive, it will actually drive up energy prices across the board, right? And there will be supply chain reroutes. If the Strait of Hormuz is blocked, companies and countries will have to find alternative routes. And this is the most important chain reaction that we need to watch, which is when oil prices goes up, inflation rate or expectation goes up as well. Why? Okay, historically, as you can look at this chart, right? As oil prices spike, okay, oil prices is the red color line. As oil prices spike, you can see that inflation actually follows along, right? You can see the relationship is about the same. It is not exactly the same, but generally speaking, as oil prices goes up, you can see inflation tends to trend upwards, right? Includes this spike over here. And similarly, the relationship goes the other way. As oil prices goes down, inflation still goes up, but the rate of increase will be slower, right? And you can see back in 2016, it is very, very clear. And 2021, 2022 is the same thing. Oil prices goes up, inflation goes up as well. Now, why is this so? It's because oil is a raw commodity in many goods like petrol, plastic, petrochemicals, cosmetic, everything. Therefore, as oil prices rise, the cost of producing all these goods rises. Okay, and of course, the silver lining is what? What is the silver lining over here? Is that current oil prices at $70. Okay, let's just take the Brent crude oil is at $72 right now, right? It is definitely not as high as what we've seen before, but the reality is that as oil prices goes up, the inflation rate might also goes up. And if energy prices goes up, while the government is going to increase defense spending to protect themselves, right? We are going to get inflation from two directions, right? Higher production costs and more money flowing to the economy because the government will have to raise the budget to spend and get money from somewhere, right? And in the environment, right, this is where when inflation is higher, the Federal Reserve can't cut interest rate in this kind of high inflation environment because doing so would make it worse. And if we see this combined with unemployment rate which doesn't go down with low economic growth, this is where we might see that worst case scenario, stagflation, which is a dangerous mix of rising inflation combined with a recessionary environment of falling GDP and increasing unemployment. Now, I'm not going to dive deep into here because I've already done an earlier video to explain about stagflation. So I'll put a link in the description box down below. Now, with that being said, right, that is how oil will actually affect, and that is where we might see the global economy being affected by what is happening now. Now, moving on to what is coming up. Okay, so this is not entirely related to what is happening, but it's important for us to know this information in order to know whether we might see some reflection of that flowing down to the actual economy. And for that, we will look at the earnings for today, right? Before the market opens today, we are going to see companies like Target, Best Buy, and Sea Limited reporting their earnings. No, so if Target misses or it gives some signs of inflation fatigue, so it will give some idea similar like how we've seen in Walmart and how we see in Costco, right? It might give us an indication of consumer spending, right? Their confidence. Are they spending as much as they want? Right, and we want to monitor what the CEO is saying for both Target and Best Buy. Okay, and we have Sea Limited as well. Now, this is mainly in Asia as well as their expansion into South America. So very similar to what we see in Target and Best Buy, but more to Asia and on the e-commerce side. And so similarly, we do also want to hear about consumer confidence in this part of the region. Are they spending more apart from the essentials? And C has also been beaten down over the past few months. And finally, tonight after the close, we have CrowdStrike. And in a world of active cyber conflict and geopolitical tensions, right? We know that cybersecurity is not a discretionary line item anymore. It is an essential business, essential service for companies, and it is as important as electricity. Now, so if CrowdStrike shows any weakness tonight, that might be a major red flag to the entire cybersecurity industry. But if they beat, it will confirm that security spending is still very strong, and also that cybersecurity is not entirely threatened by what the AI, by what new AIs tools that are coming out. So we'll be monitoring what the CEO will be saying, and he will probably be addressing all of that as well. Now, here's my overall take. War definitely affects the market in the short term, right? With all of these geopolitical tensions and people being afraid that the war, that World War III might come and things like that. But one thing's for sure, and if we look at history, it will tell us some sort of pattern. It is that the markets will always overcome the crisis that it presents at that moment in time, right? When we look at when Russia invaded Ukraine, and then at that moment at the week, the market dropped by 7%, but it recovered back its gains back where it was before that, just about a month later. And looking back at last year, Liberation Day, the markets also recovered within 2 to 3 months. And when we look at COVID, we see the same thing happening, the market recovering back to its previous high in 5 months. So I want to end off this video to share with you this chart that stocks tend to go higher despite all the bad news. So this is a chart of the Dow Jones with major geopolitical events since 1900s, right? So the whole idea is that in the long term, right? I'm not talking about the short term if you are doing trading and so, but in the long term, if you're invested in high quality companies that can stand the test of time, that has a product that is incredibly sticky, that the world needs and is moving along to what the world demands right now, like AI. Over time, these companies will appreciate as the fundamentals appreciate as well. All right, so that's what I wanted to end off with. For those who are long term, if you are invested in high quality companies, you actually don't have to worry about so much about this short term noise that the market is sharing. And that's all that we have for today's video. If you enjoy such content, be sure to hit that like and subscribe button. It will really help me to create more of such video for you. So thank you for watching, and I'll see you in the next one.